Hello, you are welcome to Romana Lounge. A few years ago, I used to be in an extremely irritating situation of having bills that would never stop piling up. And there was no money to pay them off. If you have ever experienced this, you know how stressful and difficult it can be. The good news is that you can also get out of this circumstance. Over time, I was able to do so. In today's video, I'll be discussing with you tips and strategies that you may utilize to escape this predicament. Please subscribe to this channel and hit the like button before I continue because it really helps with the YouTube algorithm. Thank you. Let's get started immediately. 1. Monitor your spending. This is probably something you've heard a million times already. But you will hear it again today because it works and because you are most likely not already doing it. In essence, it must always be a priority. Ensure that every single dollar you spend is properly justified. The primary objective of tracking your expenses is to identify and eliminate ineffective spending patterns in your financial life. Continually keeping track of your expenses can also help you keep track of your budget and promote better financial habits like saving and investing. Peter Drucker famously said, "If you can't measure it, you can't manage it." As a result, you should take the following actions to manage your spending. Analyze your spending categories first to see which are most important. You might even discover that you have been paying for things that you are not utilizing. The majority of individuals believe that reducing these non-essential expenses is a smart way to save money. Once you can see where your money is going, you will be able to make cheaper choices that will not drain your finances. 2. Make a budget. A budget is a spending plan based on income and expenses. In other words, it is an estimate of how much money you'll make and spend over a certain period of time, such as a month or year. There is a reason why majority of people do not have a budget. It is because they are concerned about having to do so much paperwork to create a budget. Budgeting might be a lot of work, but it is most definitely worthwhile. Consider the advantages and how much you stand to gain from it. Once you've established a rhythm, be sure to maintain it. Be careful not to lose your momentum. A budget that is created and then placed in a file or folder on your bookshelf or filing cabinet is completely useless. Be sure to make use of your budget. You can make budget creation easy for yourself by using digital tools such as software and apps. You may find a ton of excellent free ones online just by performing a fast search. 3. Set a cap on your unauthorized spending. Everyone is aware that making an impulsive purchase of something you hadn't planned to can be joyful and emotionally fulfilling. The emotional high, though, can disappear fast, leaving you with hasty purchases you don't actually need or want. If this applies to you, you'll have to swallow the bitter pill and put an end to it. In actuality, it is the exact reverse of wise financial practices. Try following the 1% rule for spending the next time you are in the mall. This rule stipulates that you must wait a day and think through before purchasing anything that costs more than 1% of your annual gross income. For example, if your yearly income is $60,000, you must wait a day before making a purchase that costs more than $600. This rule relates to discretionary spending on things you want but don't need. To put it another way, it is the internal struggle between, do I really need this, and, do I want this? You can rethink your purchase within the 24-hour cooling-off period. Oftentimes you will discover within that 24-hour period that you do not need most of the things that you wanted to buy impulsively. Next time you go shopping, remember what the guy from Romana Lounge advised you to do. Think through before you make that purchase. 4. Save money for major purchases. You could see a gorgeous $4,000 commercial for a spectacular 90-inch flat-screen television. It does not mean that you should start dialing the number displayed on the screen as soon as you pick up your phone and credit card. That is a terrible concept. Anytime you find yourself in this situation, always remember the 24-hour rule that the person from Romana Lounge taught you. Adopting that rule will keep you away from impulsively buying something that will plunge you into a financial crisis. According to experts, it is advisable to use the funds from your savings account designated for such purchases if you truly want that large TV. Avoid taking out a credit card loan unless you have a solid repayment strategy in place, which 99% of individuals don't. Additionally, there are a ton of benefits to saving for a significant or pricey purchase. If you save up and pay cash, you might be able to negotiate a lower price or, at the very least, better financing terms. The cost can decrease as well. Additionally, if you're making a larger purchase, acquiring a loan might make more sense, especially if you're buying a home or another property with growing value, or if you're trying to avoid withdrawing funds from your savings or investment account. It's advisable to save up for a while before you buy the items you need or want. That is because purchasing the large, expensive TV with cash can leave you with little left over for other purchases. As a result, it makes sense to start saving for that particular item now to prevent disruptions to your daily life. 5. Read books about finance. The adage, "write it down if you want to hide something," is accurate. Unfortunately, majority of individuals across the world never bother to read. If people bothered to read some of the things they often chose to disregard, they would likely find success. Learning is a lifelong process that makes your talents more refined. The more you do it, the more refined you get. The main benefit of financial literacy is having the capacity to make sensible financial decisions. It equips us with the knowledge and skills necessary for effective money management. This includes budgeting, saving, borrowing, and investing. Reading puts us in a better position to achieve our financial goals and provide financial security. Knowing that you are in charge of your financial future really puts you in a comfortable position. 6. Reduce your recurring expenses. A recurring expense is any cost you incur weekly, monthly, or annually. Although the individual amounts of these expenses may be small, they may increase or decrease if your needs change. For example, if you negotiate a rent reduction with your landlord, your recurring expense for rent will decrease. Negotiating your bills will save you tons of money. The easiest bills to negotiate tend to be cable, cell phone, and auto insurance coverage. If you do not have success in negotiating down your current rates, you can switch to alternative service providers that could save you as much as half of the bills you currently pay. Once you have your recurring expenses and interest trimmed as much as possible, focus on keeping your expenses down. You might not be able to reduce some fixed expenses, such as rent or car payments, without making significant lifestyle adjustments. But you can reduce other variable expenses, such as clothing or entertainment, by being flexible and frugal. You may, for example, reduce energy consumption. You may choose a new life or home insurance provider. You may also shop for your groceries at bulk discounts to start saving on things like your energy expenses. You should also take the time to set up a specific monthly spending limit for online shopping. Taking this step can be the difference between going over budget and having money to spare. These are some of the ways in which you can reduce your recurring bill. Here in Romana Lounge, we will do a comprehensive video on how to get your spending under control. Please look out for it in the next few weeks. 7. Eat in your house. The expense of cooking and eating meals at home may be relatively low. Simply cut back on your dependence on takeaway. The occasional extravagance at a posh restaurant is acceptable. But you might save money by starting to cook at home or by bringing your lunch to work rather than eating out every day. It might be straightforward to do if you prepare a weekly dietary plan. The following week's meals should be planned and then followed. The internet offers a seemingly endless variety of cooking and recipe instruction, even for individuals who may not be great cooks. Make at least one meal every week at home to start. You might be amazed by how much money you can actually save. 8. Repay your debts. One of the worst mistakes you can make is to carry a lot of debt, especially on high-interest credit cards. Pay off your debt as quickly as you can to improve your financial status. Paying off your debt quickly also creates new financial prospects for you. If you tend to forget things, you should establish a list of all your current bills. This should include credit card debt, student loan debt, and car loans. You should also figure out the minimal payments you need to make on each one in order to stay current. Consider your fixed expenses and how much of your discretionary spending budget you can set aside for debt repayment. This is because making minimal payments alone won't get you out of debt any faster. Additionally, you can attempt to reduce the interest rate on the debt by asking the issuer for a lower rate. You can also combine many loans into one. You can transfer high-interest debt to a credit card with a reduced interest rate. An example of such credit card is a balance transfer card. This will reduce the overall interest rate. Build sensible spending habits and a debt payback strategy. This will enable you to pay off the debt as quickly as possible. The more quickly you pay off your debt, the bigger your monthly budget will be. Paying off credit card debt needs to be a priority. The reason is because credit card debt rises over time. And it is difficult to reduce, unlike your car or house payment. 9. Stop using credit cards. Credit cards are a fantastic and useful instrument to have. They may save your life when you need them. They are also excellent at raising your credit score. However, some people lack self-control. And the quick and easy solution to their problems is a credit card. This reliance on credit card means that they quickly dig themselves into trouble. If you are struggling to make ends meet each month, you might be relying too heavily on your credit cards. You will soon find yourself in debt if you keep utilizing your credit cards to get by. You will be limited in your capacity to pay your bills. You will not be able to save for retirement or pursue other financial goals as a result of this. So, if you truly want to manage your finances, stop using credit cards. Try switching to cash or debit cards. Start a short-term savings account. Use money from it for significant expenditures. Leave your credit card at home. Create a budget so you don't have to use credit card to avoid piling up more debt. In the event of an emergency, credit cards can be very stressful. That is because of their high interest rates, which can quickly lead to debt accumulation if they are not utilized carefully. Many people get into the unfortunate habit of relying on their credit cards because they feel that their money gets used up too quickly each month. They have spent all of their money on bills, food, rent or mortgage, and other costs. As a result, they run out of money and rely on their credit cards to carry them through till payday. Stop using your credit cards entirely and find other ways to pay for bills. Until you gain the knowledge and experience necessary to use such a tool. 10. Go on a spending fast. Do you have credit card debt, or trouble making payments on time? Or do you have other financial issues that are troubling you? A spending fast may be just what your personal finances require. Going on a spending fast means you won't be making any discretionary purchases for a set period of time. This is another excellent strategy to cut back on your expenditures and organize your cash. It might sound a bit far-reaching, but it is doable. You may have heard of the popular detox or cleaning fasts for your body. Typical example is skipping gluten or sugar for 30 days or even subsisting only on fruit or vegetable juices for a few weeks. But did you realize that you can achieve financial wellness by applying similar fasting or cleaning practices to your spending and saving habits? You need to deliberately set out times where spending is limited to certain types of expenses, such as food, transportation, and recurrent needs only. If you're prepared to reduce your expenses, take on this challenge. It will increase your bank balance. Modify your behavior, and decide what you actually need as opposed to merely what you want. The experience may even alter your outlook on money. I sincerely hope this was useful to you. By simply following the instructions in this video, you may now always be one step ahead of your financial situation. Simply put, you will now have more money. Please feel free to ask any questions in the comments section below. With that said, I want to thank you all for watching. Wish you all the best, and look forward to seeing you in the upcoming video.